They also had issues with the valuation. How does the valuation come about? We tried to, the principal, you see a principal treasurer of MEDIA-Robsyiti, tried to throw some light, okay? But I think now that we have more local government officials, they will also throw further light, because his issue was we bring in a valuation firm and does everything. I think it's very important for also local government officials to know how this valuation is done. Because at the end of the day, when you bring in a valuation firm, it will come do its work, pack up and leave. And then you're left with the task of explaining to these property owners or these taxpayers, how are you, why are you collecting the money you're collecting, and why are you collecting this much? So in this session, I'll try as much as possible, one, to open your minds. I know some of you have a bit of information, some of you are more aware than I am, but we shall keep on engaging and helping each other. So I'm going to start with a small introduction. And we are saying that property taxes constitute of levies charged by government on the value stroke ownership of immovable property. So property taxes are charged on immovable property. Buildings majorly, I can say that. If you have an empty lot in the city, that is empty land in the city, it does not pay property tax. So we are looking at immovable property, buildings, and two, the tax is paid by an owner, the registered owner of a property. It is not paid by the tenant, it is not paid by the lessee, it is not paid by any other person, but you, who is the registered owner of the property, you're the one with the responsibility to pay property taxes in Uganda. From the word go, I'm going to differentiate between a property tax rate and rental income tax. Okay? These are two different. Rental income tax is paid on rent that you collect from a building. If you earn a particular amount of money from your building, you pay tax on that rental income that you've earned. Whereas property tax that is collected by the local government is paid by virtue of the fact that you have a commercial, either residential or a business property in an urban area. So you own this. So you're paying that tax because you own the property. Okay? Whereas rental income, you're paying on the income. So that means that your property tax is a constant for a particular period of time. In Kampala, it's usually 5 years. A revaluation is done every other 5 years. I was informed that in MEDIA-Robsyiti, you've just had one financial year of collecting property tax. So in Kampala, we've been doing it, I think for so many years. So for us, it stays constant for 5 years. Whereas your rental income tax can change every other financial year. Because you may find that, for example, to the previous financial year, your building was fully occupied. You earned your full rental income. For example, you earn maybe 20 million. You pay tax on the entire 20 million. You find that in the next financial year, your building was not fully occupied. Or you had renters who actually ran away with your money. Or for one reason or another, your income was less than what you earned the previous year. Maybe you did more modifications and you earned more income. So you find that rental income tax will change annually, whereas your property tax will stay constant for a particular given period of time. So if we are talking about property taxes, what kinds of laws are we going to look at? Of course, we shall look at the Constitution of the Republic of Uganda, because all other acts of Parliament draw their legitimacy from the Constitution of the Republic of Uganda. So usually when we start looking at laws, we have to go back to the Constitution and say, what does the Constitution say about this particular issue? Of course, we shall talk about the Income Tax Act that is applied by the Uganda Revenue Authority. We shall talk about the Local Governments Act, because your local government and whatever you do is within the Local Governments Act. We shall talk about the Local Government Ratings Act, because it specifically addresses the issues of property rates. So under the Constitution, of course, we look at, we say that Article 191 of the Constitution allows local governments to levy taxes, levies, fees in accordance with the laws enacted by Parliament. And in Uganda, Traditional property taxes exist in the form of rates under the Local Government Ratings Act of 2005. So what I simply wanted to say is that when you go to a taxpayer and they ask you where you draw your mandate from to collect these levies from them, you draw your mandate from the Constitution of the Republic of Uganda under Article 191. And when they ask the particulars of those rates, how do you collect them? How much are they supposed to pay? If they fail to pay, how are you supposed to enforce, these payments? Then you go to the Local Government Ratings Act of 2005. Article 191 of the Constitution states that local governments shall have the power to levy, charge, collect, and appropriate fees and taxes in accordance with any law enacted by Parliament by virtue of Article 152 of the Constitution. And sub-Article 2 says that the fees and taxes to be levied, charged, collected, and appropriated under Clause 1 of this article shall consist of rates, rents, royalties, stamp duties, cess, fees on registration and licensing, and any other fees and taxes that Parliament may prescribe. Yesterday we had an issue here. People were asking, what is the difference between property rates? Why do you collect licenses? Why do you collect market dues? Why do you collect this and that and that? And we went through, and I gave myself as an example, and I said, as a practicing lawyer, I pay a couple of different taxes because the law allows whoever licenses me to collect those different types of taxes from one business and from one person. I said the fact that someone licenses my law firm before I open the doors. Someone licenses me to sit in that law firm. Someone licenses me to work with taxpayers and to represent taxpayers at the Uganda Revenue Authority. I cannot just walk into the Revenue Authority and represent a taxpayer. I must pay, and I must be registered with the Revenue Authority. This is the fact that I went to school, learned tax, I'm competent on tax. For me to appear before the Revenue Authority, I must actually be licensed. I pay tax on the income I earn from this revenue, from this practice. Okay, I pay business income tax from my revenue in the law firm. I pay NSSF. I pay tax for my employees. So you find that under this particular provision of the law, you local government, you've been given powers to collect the different types of taxes that you do collect. So it doesn't mean because you've collected a property rate from someone, you cannot collect licensing fees, you cannot collect marriage fees. The law allows you to collect the different types of. So it is your responsibility to sit down these taxpayers and explain to them that, look, we collect this much money from you, but it's given different names here and there. That is what happens. So I went ahead and looked at the Local Government Ratings Act specifically because it addresses the issue of property rates. And under Section 3, Clause 1, it says that every local government, if I'm too fast, you just slow me down. Sometimes I tend to. It is okay? Right. Okay. So under Section 3.1, they tell us that every local government shall levy such rates as it may determine on the basis of the rateable value of any property within its area of jurisdiction. So a local government has an area of jurisdiction. Later on, we shall see that we collect the property rates from urban areas. And the law, of course, defines for you what is an urban area. Okay? And under what circumstances may you collect a property rate outside an urban area? 2, the law goes ahead and gives you a minimum amount of money you can collect from a property, and that is just 2,000 shillings. So you cannot have a property that pays less than 2,000 shillings in a financial year. However, you cannot also collect more than 12% of the rateable value of the property. Now, the issue yesterday was people did not understand what is the rateable value of the property. 2, how do you local governments come up with a rateable value? I think we've left that issue to the valuers who come in from Kampala. They do the valuation, they give you the figures, they go away. And then when your taxpayers come to you and ask you, how did you come up with this particular figure? We do not understand where the figure comes from. So I'm going to take the act and read it slowly. And together we understand, because we are also property owners. And we also pay property rates. And probably you also wonder, why are they taxing me this much? And why do they say that my rateable value is maybe 15 million or 20 million? So under section, definition section of the Local Governments Rating Act, and maybe another pointer, whenever you have an act and you come across a term that you do not understand, please just go to the interpretation section. The first page is section, it's usually section 1 or section 2 of an act. It usually defines for you, because you may find that you have an act that talks about a minister. Every single act defines who a minister is for purposes of that particular act or for purposes of that particular business. So it is very important that if you come across a term in a particular law and you would like to understand it, just go to the definition section, usually section 1 or section 2. In this particular act, it's section 2, it's the interpretation section. And it says that rateable value means the net annual rental value of a property ascertained in accordance with this particular act. So it is sending you to read the act further and understand how do they come up with the net annual rental value. Do not leave this question to the valuers. Also, you understand it so that when you go to this person and collect tax from them and they ask you these questions, you're in a position to answer. So the Act tells us that, of course, it defines the difference of the two different ways you can come up with a rateable value of a property, and that is section 11 of the Act. And it says, for the purposes of valuation lists to be prepared under this Act, the rateable value of any property shall be ascertained as follows. 1. If the property is one other than an industrial or commercial building, there shall be deducted from the gross value of the property such amount as the minister may by statutory order determine, and the gross value so reduced shall be taken to be the net annual value. This is what happens if the property is not industrial or commercial. The minister sits down and says that, you know what, in this instance they are talking about residential apartments, let me give it that term, or residential houses that are let out. Because ordinarily residential houses do not pay property tax. If you exclusively use your property for sleeping, you as the owner of the property, you're not supposed to pay property tax on that particular house or building. But if you have an apartment or you have rentals, mizigo, in whatever form, someone yesterday asked us, but we have mad and mato. Are they supposed to pay? And I said, as long as they are let out and they earn income for the property owner, they're supposed to pay. The issue will be on how much they're supposed to pay. But as long as they are let out, they should pay. And of course, they are located within the areas that are supposed to be taxed. So they should pay. So if you're dealing with an apartment or residential house, the minister will come up with a figure and say that a house, let me give an example of Kampala because I'm more familiar with that. If I'm staying in Makindye division, the minister will say that in Makindye division, when we look at houses or when we look at a house located here, we think this is how much you spend on maintaining this particular property. So they will estimate how much you earn, of course, from the property. We all know that landlords or property owners never give the true figure that they earn from the property. So you come to my property, I will tell you I earn 400,000 from each unit. Well, like probably I earn 700,000. So based on the location of the property, the valuers will come up with how much they think you earn from the property annually. That is the gross value or the gross amount you earn from the property during that financial year. Then they will deduct what the minister has set as the standard figure, and then what is left is what it's the rate. It's on that amount that a rate shall be applied. I was told in MEDIA-Robsyiti it's 5%, in Kampala it is 6%. So that is what determines how much a person shall pay. And if we are dealing with a property that is industrial or commercial, the law says that if the property is an industrial or commercial building, there shall be estimated the rent at which the property may reasonably be expected to let from year to year if the tenant undertook to pay conservancy fees, water rates, and any other usual tenant rates and taxes, and to bear the cost of the repairs and insurance and any other expenses necessary to maintain the property in a state to command that rent. And the amount of rent as so estimated shall be taken to be the net annual value. So we note that when it comes to an industrial or commercial property, actually they look at other factors. How much do you spend on water? What repairs do you do? Do you pay for security? Is your building insured? So when they look at those figures, then it's deducted from the gross rental that you're earning for a particular year of income, and whatever is left, it becomes the net annual value. So that is how a property tax, a particular property tax is generated. So when these people come to us, please let's explain to them in that way. So I went ahead to say that which properties are supposed to pay these taxes. Subsection 3 of the Act guides and says that subject to subsection 4 of this section, the rate may be levied under this section only in respect to an urban area. But what is an urban area? An urban area means a city, municipality, and town, and also any other area prescribed by the minister by statutory instrument. I will not go into what conditions or what does the minister look at to declare a place a city, a municipality, or a town. I usually just see people on TV celebrating that they were made a city, forgetting that once you become a city, you're going to pay more taxes to the government. That you become a municipality, you're going to pay more taxes to the government. But government has its reasons as to why it declares some places cities, municipalities, or towns. So for us, we are saying that as long as you reside in a city, municipality, town, and you own property there, that is supposed to pay taxes, then you're supposed to pay. However, subsection 4 states that notwithstanding subsection 3, the rate may be levied in any area outside the urban area in respect of a commercial building. So if you have an area outside the city, Arua city, outside is, so when you have a city, you still have a municipality and you still have a town?
Yes.
You still have any of those?
Yes.
Okay, so when you have a commercial building located outside any of those, the law allows you to collect property tax from that particular property owner. Telling us that for the avoidance of doubts, no rate shall be levied in respect of a residential building in a place not being in the urban area. Residential building means a building used exclusively for residential purposes. So as long as you use the building, even if you're located in an urban area, what usually happens in Kampala is that you're living in town, your house will be assessed and a rate shall be applied to your house. However, when it comes to payment, your house will not pay and the system will clearly show that it's a residential area. However, it will be rated and taxed. So who is liable to pay the property tax? They are telling us that a person liable to pay to the payment of the rate shall be the owner of the property in respect of which the assessment is made. So as long as you're the owner of the property, you're the registered owner, then you should pay the property tax. I think there is a challenge that the revenue authority has, no, the local authority, for example in Kampala, where a person dies, okay? Remember when you don't pay your property tax on time, then a penalty is charged. It's a 2% every month. So what happens in instances, I think we've all seen where a property owner passes on and the family fails to organize itself in time. Because when a person dies, then the right to pay or the obligation to pay the property tax first falls on the administrator of the estate before they share out this property to the beneficiaries. So you find instances where the family takes long to organize itself. Along the way, they get an administrator. By the time the administrator comes in, then you have a huge bill of property tax. I think it's something that implementers of this law should also look at. It's a lacuna in the law. You're putting this entire liability on an estate. However, this estate is not organized. If they had been organized on time, which is probably beyond their control, they maybe would have paid these taxes in time, but they didn't. So when these people come to you and they want a waiver, do you grant it? Do you refuse it? What usually happens in those instances? And I think this subsection also takes care of instances where you have your valuers go to properties and the owners hide. They deny audience to the valuers. They are asking questions, and I think if they deny ownership, they don't provide any information, then they will frustrate you from collecting taxes. The law says that where the name of the owner of any property is not known to a local government, it shall be sufficient to assess the person to the rate by the description of the occupier of the property, in respect of which the assessment is made, without further name or description. So if the person hides away from you people, please don't refuse to assess the building. The law allows you to assess in absentia. You just have to describe the property and raise your assessments. I think we've gone through the governing law. We've talked about the fact that property rates are based or are determined by qualified registered valuation of surveyors. And of course, we've said that residential properties occupied by owners are currently exempted from attracting taxes. We've defined what is rateable value, and we've said that property means immovable property, including buildings or structures of any kind, excluding vacant sites. If you have a vacant site and you put on a washing bay, it ceases to be vacant. If you have a vacant site and you lease out for night parking, it ceases to be a vacant site. So you're supposed to collect taxes from it. Who's eligible to pay? We've already said that it's the owner of the property. So what happens if someone fails to pay on time or in time? You have instances where people claim, you know what, I wasn't around, I didn't know. Does the local government have any powers to collect this revenue? Yes, they do. And how do they collect this? One, you can recover this tax through a warrant. This is done by going to a magistrate. The magistrate will look at the circumstances of the case and grant you a warrant that allows you to collect this property tax. In Kampala, they don't waste time with it. They just seal your building. So you will not have access. And the worst thing you can do to yourself is break that seal. It is, what do they call those sins that cannot be forgiven? That sin cannot be forgiven. You break that seal, you will sleep in jail. So a KCCA seal is respected more than anything you can imagine. However powerful you are, however connected you are, you do not break the seal. Go through your connections, they call the officer who put the seal to remove the seal. So that is a very good way to, you instill the fear of the Lord in them so that they don't break your seal. The worst thing you can do is to break a KCCA seal. So for us, they will not bother with a warrant. They will write a demand letter to you, give you 2 months to pay, you don't pay. They'll come and seal off your building. If you have tenants, they will cry out to you, refuse to pay you, you will pay their money. And then they are telling us that you can actually auction people's property to recover the amount that's outstanding plus any interest. That is a tricky one, but it's a tricky one. And they're telling us that we can also recover from tenants and current occupiers. What KCCA does in Kampala, they just seal off your premises because no tenant is going to pay your taxes. Usually when we even draft our tenants agreements, we clearly state it that the right to pay property taxes and any local, rates that may arise, it will be on the property owner. So what KCCA does, it just seals off your property. Your tenant will call you non-stop because they want to work. You will take yourself to KCCA and pay the money. So it is something, I don't know, do you seal people's premises here? They break and you do nothing. You should instill the fear. Trust me, they will learn that you cannot break that seal. It is the most dangerous thing you can do in Kampala. Just enforce on 1 or 2, 3 people. They will not break it anymore. So they are telling us that what happens in instances where you purchase property from someone that has arrears. You find that some people purchase properties and they have arrears, and when you come to collect, they explain to you that, look, I didn't know, I didn't understand, I couldn't pay, I didn't know there were arrears. Do you have any powers? Yes, you do have powers. What do? You prohibit the transfer of that property until the arrears are paid. Before you transfer, you allow a transfer. I think this would require you to work hand in hand with the land people. So the teamwork that has been talked about since morning. So you need to engage those lands people, inform them, educate them of what property taxes are, to ensure that they do not make any transfers until your arrears have been collected. If you refuse to transfer, the new buyer will force the seller to pay your arrears. So the law does not leave you empty-handed. It gives you a few methods through which you can collect your arrears. So it is now up to you to make a decision on how you intend to enforce and how far. My next slide is on the fact that a few people are exempted from paying property rate taxes. Who are these people? If you go to the Act, it talks about the second schedule. It gives you a list of so many people who are supposed to not pay your taxes. One, they tell us that any official residence of the president does not pay property tax. Any official residence of a traditional or cultural leader within the meaning of Article 246 of the Constitution. Any property used exclusively for public worship and as a residence of a religious leader. Of course, we had a lot to say about places of public worship. I think when the law was passed, it did not anticipate that we would have mushrooming churches every single day. People rent out small rooms and they call them places of worship. How are you dealing with that? Do you tax these people who have mushrooming churches because they are income earning premises? How do you deal with these people? I think the law did not anticipate, and maybe it probably didn't even define what is a public place of worship. Actually, it didn't. So I think there is a bit of gray there, and it's something that you need to, to push for to get a clear definition. Because people wake up in Uganda every single day and start charges for one reason or another. Then they are telling us that any property used exclusively as a cemetery or as a crematorium, it doesn't pay property tax. Any property used exclusively for the purposes of any charitable or educational institution of a public character, supported only by endowments or voluntary contributions. Private schools are supposed to pay. Do not exclude them on basis that they are schools. It is public institutions that that have a public character, and they are supported only by endowments or voluntary contributions. Then they are telling us that any property laid out and used exclusively for the purpose of outdoor sport or recreation, or designated as public open scheme made under the Town and Country Planning Act and controlled in accordance with the rules and regulations approved by the local governments. I think recently we've got a new business venture of creating football pitches. Those small football turfs are supposed to pay taxes. They are not excluded from paying property tax because they are private entities. They are telling us that any property belonging to a local council within the meaning of the Local Governments Act does not pay any tax. Then subsection 8 talks about any property owned by any of the following organizations. Any organization or mission entitled to privileges under the Diplomatic Privileges Act to the extent provided in the regulations and orders made under that act. So for you to make a call on this particular section, you also have to look at the Diplomatic Privileges Act. It gives a list of those organizations that benefit from the act. Then they are telling us that any organization in respect of which Uganda is obliged under any international convention, treaty or similar arrangement to exempt from taxation or similar obligations to the extent provided for in the international convention, treaty or arrangements. We have organizations that are here that have signed treaties with our government not to pay any taxes. So if someone claims that they're not supposed to pay taxes, they're supposed to give you proof of that treaty that exempts them from. Remember, for purposes of tax, the obligation to prove that you're not supposed to pay tax has never shifted to the tax collector. It is always on the tax payer. So for you assess, let this person be the person to prove to you that they are not supposed to pay taxes. Then C, they are telling us any institution which government has contractual obligation not to levy fees and tax against it. We've seen, I think we've even had cases where this has come into issue, and their question has always been, who has the right to exempt a particular person, individual, company from paying taxes? So if a person has an exemption, your duty to ask is who gave them the exemption. Do they have the right to have the exemption from paying taxes, or it's actually an illegal exemption? But if well enforced, it's a very good revenue generating tax for local governments. KCCA has done very well. Trust me, there is no, even if you have a very tiny room like this, you actually pay your property tax. So if you enforce it, you educate these property owners, inform them that you have mandate and what you're collecting is totally different from what revenue is collecting from them, you should be able to collect a good amount of taxes. Because I think in Uganda, the best thing that can happen to an individual, or what we all aspire to, is to own property. Everybody works to own property. And usually before we own residential houses, we work hard to own rental premises. So every single person who is working hard is targeting a rental property. So it is a good area to generate some income. Usually people confuse property taxes with ground rent. Ground rent is regulated under the Land Act, and it talks about ground rent arises from a relationship of a tenant and a landlord, and it is determined by contract. So they are telling us that leaseholders of public land offered by the district land board and holders of district land are the people who pay ground rent. So I think this is an area that's left to the district land boards. How much is supposed to be paid is always determined by the lease agreement between the district land board and businesses. So that is as much as I can say about ground rent. It's a contractual arrangement. So if someone asks you for ground rent, you must be in possession of public land or district land. Of course, my last slides are on rental income tax, which is outside your scope. It's collected by the Revenue Authority. However, you need knowledge on it because those are the questions you're going to meet when you go to collect your property tax. People would want to know. So I tried to talk about the key terms and to define. So, and we are saying that rental income is the total amount of rent derived by a person for the year of income from the lease of immovable property, that is land or buildings in Uganda, with a deduction of any expenditure incurred in respect of the property. The taxation of rental income is provided for under Section 5 of the Income Tax Act, and this is rent earned by persons and segregated and taxed separately. So we have instances, and I think property owners, where, for example, you have a building and you rent out maybe 4 rooms and you use 1 room for personal business. So when you ask this person to pay rental tax and you also tell them that you're supposed to pay income tax for business, they are confused. To them, if I pay rental tax, tax on this rental income, then I shouldn't pay tax on this business that I'm running in my premises. But those are 2 different types of taxes. Rental income, that is a separate business, and also running a business in your own property is a business, is a different income. So those different incomes pay different types of taxes and different rates of taxes. So they are telling us that under Section 5, tax shall be charged each year of income and is imposed on every individual who has rental income for the year of income. As I started from the beginning, rental income is not a constant. It only arises if you've earned income for that particular year of income. You realize that before, government never realized how lucrative rental income was. And when it realized that rental income is lucrative, we've gone through different changes. We've had instances of where they've charged us 30%, we went to 75%, we went to 20%. At the moment we are at 12% for individuals and 30% for companies. And maybe it's also very important that for rental income taxes, if your property is owned in your name, you pay tax as an individual, and the rate of tax is 12%. If your property is owned by a company, okay, and you're running business as a real estate company, you pay a rate of tax of 30%. So how do we compute this rental income? For it, it's very easy. We look at the gross income you earned as an individual. As an individual, you're not allowed any expenses. Whether you repaired your house, you repainted your house, you had security, it is not important. Under the current regime, when we look at your total income, for example, you earned 10 million, you're allowed a deduction of about 2,820,000. So they will get your 10 million, deduct 2,820,000, 2,820,000. Then the balance that is left at 12% is imposed. So whatever comes, if you earn 10 million, your chargeable income will be 7,280,000. And if that 12% is imposed on that figure, your tax will be about 873,000. So for an individual, the rental tax is as direct as that. It is the easiest tax to pay. There is nothing like you must be a lawyer. There's nothing like you must have information as, I don't know, as a tax consultant. Simply get your amount as an individual. I earned 10 million, deduct 2,820,000. Whatever is left, put 12%, pay URA taxes. Simple as that. However, when we come to companies, then the deduction changes. So for companies, they are allowed a 50% deduction of expenses incurred for that particular year of income. So when we say that you earned income of 10 million, what were your expenses in earning this income? If your expenses were up to like 5 million, the law only allows you up to 50%. So they will get your 10 million, deduct 1.5, the balance is taxed at 30%. You will find that under this new regime, if you own property as an individual, you pay less taxes compared to someone who is owning their property through a company. I don't know why the government chose to do that. I don't know why it's discouraging people from setting up companies to manage their properties, because there is no sane person who will pay taxes through the company if the rate is that high. Because usually people own companies for ease of doing business, getting loans, and so many other things. So rental tax, that is the sum total of rental tax. There is no magic to it. There is no technicality that is required. Maybe the technicality will come in how do I file a return, when do I file a return, and that you walk into URA offices, they will be able to assist you, or you engage a tax agent to assist you with how you will pay and how you will file your taxes. And delivery of services under subsection 2. So the only way you can convince these people to take on a higher rate than that 2, of course you can use force. It is available to you. But we also know that force doesn't yield much. It's always much better to find a middle ground with the taxpayers. However, you have to comply with subsection 2 of 37. You have to show them what their money does. If you could show to them what their money does and what changes that money has done, it would become much easier for you to even collect 12%. You could even collect 12%. If people have street lighting, if people have roads, if their cities are clean, you know, if, I don't know, sewage is worked on, you could collect. That is the only solution I have, other than showing them what their property tax does. I do not know if under the one treasury system, even property tax is paid directly to the consolidated fund, or after the property taxes are still collected and this tax fund still works at the local government. Please tell, do you have these property tax funds? Are they working? Do you submit this money to the consolidated fund, or is it actually at your local authority levels? Yes. No one is saying it goes to the consolidated fund. Why?
There is account. And it depends on the agreed position. During budgeting.
Okay.
Where the money will be spent.
Okay.
So those expenditure lines are it is upon the town council or the municipality of the district to put the money in those budget lines. Where the taxpayers are agreed. And if the money is collected in the consolidated fund, and it becomes what we spend on those expenditure areas.
Okay. Do you usually engage these parents associations when you're budgeting for a particular year of income to see what their priorities are? URA does not have the mandate to account to taxpayers, but the local government has that. It is supposed to account to these taxpayers. So unless you account to them, collecting will be by force. You will have to adopt Kampala style. It is force. Over sewage is flowing outside your door, your window, you're jumping, your garbage is not being collected. I think you've seen us on TV with our garbage piles. Does not matter. The next day the KCC person will come and collect and put a seal. So unlike Kampala, you can account to your taxpayers. So if you engage them in budgeting and, I don't know, do some bit of accountability to the level that you can manage, we all understand the situation. To the level you can manage, I think you can sway them to give you a bit more money than they are giving you. Thank you very much.